The Swiss National Bank shocked everyone. Here's what happened. It's abandoning its policy of a 120 floor for the currency against the euro. That peg was put in place a few years ago to keep the Swiss franc from getting too strong, hurting Swiss exports, a key part of that country's economy. This all goes back to the European debt crisis. People couldn't get enough francs. So why get rid of it? Well, it was becoming very costly for the Swiss National Bank, wreaking havoc on its balance sheet as they built up more than 500 billion francs in reserves just having to defend it. But why now? That's the interesting part. Many suspect it's because the European Central Bank is about to pull the trigger for QE, or stimulus. That would only lead to more money rushing out of the euro and piling into the Swiss franc. There's also been a rush lately into Swiss francs on that mass exodus from the Russian ruble. All of this would make it much more difficult and much more expensive for the Swiss Central Bank to defend the peg that it promised to defend. So it scrapped it. The view is the central bank did not want to risk its credibility or spend hundreds of billions more to keep the level in place. The central bank communicated, bottom line, a clear message to the markets, and that is you are in control of this currency. And guess what? The markets took control. The Swiss franc jumped as much as 30%. That is unprecedented and awfully painful if you're a Swiss exporter like Nestle. It also causes ripple effects across markets and economies in the world.